Right. Welcome to my first non-farm payrolls webinar. Actually, I've done loads of webinars before with Handtech, but this is my first payrolls webinar. Got a lot to get through in the next 15 minutes before the payrolls report, but very quickly, show you the disclaimer, because I'm going to be talking about live market information, obviously, and read and understand the disclaimer. I will show it again at the end, just in case. And also to say to you that this webinar is being recorded as well. But yeah, any comments and stuff that you want to talk about, just put it in the chat box. Obviously, I'm going to talk about the expectations of the employment situation report that we're about to see. What could be the drivers of the market reaction? Certain markets to watch after the data. We're going to be doing live analysis as well for how we're going to be assessing the impact of the report. Right. So basically, what are we looking at with the payrolls report? Well, I mean, we all know what I'm hoping by now. The reason you're here is because you'll understand that the payrolls report is the most important data point of the month, pretty much. Markets moved significantly on payrolls. Certainly the dollar and the FX markets, but also gold is a big mover on the payrolls report. Now, first of all, you could argue, what are we actually looking for from the report? Well, is the headline data the most important bits of information to take out of the payrolls report? Now, it's debatable, because I think the Fed is obviously well, I say that until last month it probably wasn't, but now maybe so. Maybe it is again, because last month the payrolls headline was so disappointing that maybe the headline number will be the main mover. But up until last month, it was basically the market had just sort of considered the fact that average hourly earnings was probably the bigger driver, because market was sort of expecting just a consistently strong or solid payrolls number, and then the Fed was sort of saying, well, the labour market remains solid and strong and continues to improve, but then it needs inflation. So what is the driver of inflation? Well, average hourly earnings is considered to be the driver of inflation in the payrolls report. So subsequently, the average hourly earnings data has been, up until last month especially, more important. But it's sort of a 50-50 call now. But I think what we need to look out for is certainly the headline number now. What's the reaction going to be to last month's 38? Let's show you the data. What's going to be the reaction to last month's 38,000? I mean, that was the lowest since that data in September 2010. It's likely to be revised higher, and again, I would say watch out for revisions. There are going to be some probably some significant revision higher on that 38,000. Maybe not. But yeah, the payrolls headline is very important. Once again, it would appear. Now, this is the forex factory payrolls data. If anyone can see it, I hope they can at the bottom of my screen now. You can see that revisions, which are these little dark blue ticks, they tend to be quite significant and have been downward revisions in the last few months. So that is something that could have an impact as well. So we're looking out for payrolls headline. The expectation is for 175,000. And on the payrolls headline, average hourly earnings expectation is at 0.2% month on month. Pretty much, as you can see, according to forex factory. According to forex factory, pretty much every month they expect 0.2% on the month on month. So in terms of the expectations, that's pretty much normal. But for the year-on-year data, that actually would be an improvement, because last June was 0.0, and subsequently, actually that is that one. Last June it was 0.0. So subsequently, if you get 0.2, that would be an uplift of the year-on-year data by 0.2%. So that would actually improve the year-on-year data to 2.7. So that would be traction in the average hourly earnings on the year-on-year basis. So that would be a positive. So yeah, that is the average hourly earnings data. Now, in terms of the other data, unemployment is interesting it hasn't really been that interesting until last month, and I'll tell you why. Because unemployment fell unexpectedly to 4.7%, having been expected to only be, I think, 4.9%. Now that was a real surprise, and not a good surprise, because the participation rate fell significantly. Participation rate last month fell to 62.6. Now that suggests people falling out of the labour force from 62.8. That's a really strong decline actually. That suggests people falling out of the labour force, which is not positive. So the unemployment rate going down on the back of participation rate falling was not a positive. So not only did you have the headline payrolls falling, you also had the participation rate falling and unemployment falling because of that. So that does not suggest that the US is at maximum employment, which is where the Fed wants it to be, so you can get real traction in wage growth and then inflation coming forward. It's that participation rate falling is an important one. So you'd want to see the participation rate rising, and that might even induce a little bit of an unemployment rise as well. So that is the actual expectation, to 4.8% on the unemployment. But yes, so we'll watch out for that. What makes a solid report? Just talk about market sentiment going into it, because market sentiment is really important, because if market sentiment is positive and the markets are expecting the possibility of a rate hike imminently, then a strong payrolls report would be very strong dollar and possibly risk negative, because you'd see risk appetite being impacted by tighter monetary policy. But at the moment, generally markets are very cautious in the wake of Brexit. So not only that, you've seen markets push out their expectations for a Fed rate hike. So subsequently, positive data, or certainly in-line data, and I'll talk about this in a little bit, but in-line data would be considered, I think, positive for risk because of that, because it sort of suggests a bit of a stabilising, maybe even, certainly if there was an upward revision of last month of any real note, then that would sort of suggest maybe a bit of a stabilisation there. But obviously the Fed is still really cautious about Brexit and the impact of Brexit, so ultimately there's no real expectation of a rate hike any time soon. So I'll talk about that in a bit. But what would make a solid payrolls report? I think anything between sort of 160, 190 would be solid. Average hourly earnings in line with expectations at 0.2% or a little bit higher. As I said, participation rate increasing from 62.6 would be important, and also the unemployment in line with expectations at 4.8%. But as I said, the Fed is basically now focusing on the data once again. I mean, it was very cautious last month on the FOMC, driven by that payrolls data, so that they took a dovish shift on the back of that on the back of that payrolls report. So you'd need to see payrolls coming in positively again to sort of help to stabilise opinion on the FOMC, really. Okay, so what are we going to expect? Well, a week report. So what would be a week report? Well, sort of 130, 140 payrolls, average hourly earnings, maybe 0.1 or flat, and unemployment probably not moving from 4.7, I would actually say, because that would suggest that the participation rate hasn't gone up. And I think that would be risk off. That would have an impact across forex markets. Dollar yen would be the big mover, I think. Dollar yen, or the yen, has been the major mover on Brexit because of the significant safe haven shift in the market. And I think the yen strength on a weak payrolls report would be a big driver. Weak dollar as well, obviously, because the US dollar is very tightly closely linked to payrolls report. But the impact on euro and sterling would be interesting, because they're both now risk trades with this Brexit data. Quick little question from Chris quickly. Okay, positive report data positive for US? Yes, correct. Would you concur then to short the euro? Well, it's a difficult one, and I say that because I think the reaction on the euro dollar would be difficult to really ascertain, because if you had a weak payrolls report, theoretically that would be strong for the for euro dollar in a normal month. Whether this is a normal month or not, coming in just after Brexit, and the whole fact that the euro is being sold in the wake of Brexit, it's difficult to really. It's a difficult one to call, I think. But certainly the big mover will be dollar yen. I think the yen will be a really strong mover on a weak payrolls report. In terms of commodities, again, safe haven trading would suggest gold would be a strong mover. Oil would be weak because oil would be linked to the growth. Global growth play. A weak payrolls report would be disappointing for global growth. So subsequently, a weak oil price on the back of that. And also, in terms of indices as well, anyone who trades the DAX, I would expect that to underperform FTSE. FTSE has been an outperformer as sterling has fallen away, and I think that would likely to continue, because not only the DAX underperforms FTSE on the weak sterling, but also DAX underperforms on risk-off days as well because of its tight or positive correlation to sort of global growth indicators as well. In terms of an in-line report, we'd be looking for, I think that would be positive for markets. So I'd say that's positive for euro, positive for sterling, and weak for weak for the yen, and that would be pulling dollar yen higher. I think again an in-line report would be positive for risk, meaning I think gold would be weaker and oil would be positive. Sort of the opposite arguments to this here, and indices would also be supported and positive. A strong report. What would be a strong report? Well, I think we'd be looking out for 220 plus. I mean, Goldman Sachs have come out and said that they think it's going to be 200 plus. This payrolls number. I'm not so sure. We haven't. I think the important payrolls report may be next month to take away because of the Brexit data or Brexit results being fully factored into a whole month of jobs. But yeah, I think that a strong report would be dollar strong, certainly, because it sort of would usher in the fact that a payrolls report would, a Fed rate hike would be sort of coming back in towards play again. Okay, sorry, big question. Sorry, my connection has gone off. What would be the stronger mover on positive non-farm payrolls? I think dollar yen. I always think dollar yen is a big mover because of the whole fact that the yen is such a strong safe haven play that anything positive for risk would be a strong mover on dollar yen. And I think dollar yen would be the strong mover there. And gold price lower. Gold is also another play that really does react to the payrolls report. So keep that in mind when we're going to look at that. And I think oil would be supported as well. Again, I think it would be positive for for equity markets as well, generally speaking. So in terms of your, I mean, sort of a question, answer your question again. I mean, in terms of your high risk, high impact movers, I think you're looking out for gold being a high impact mover, considering the strong run higher we've had. Maybe even silver. On top of that, I think silver has had a ridiculously strong run in recent weeks in the wake of this Brexit decision. So you'd see a certain amount of that unwinding, I think, on a very strong payrolls report, and dollar yen being a big mover as well. Right, what I'm going to do now is have just bring up, because we've got 1 minute now. All my charts. Oh, crikey, there they all are. Well done. Right, so let's just move that down, and you can see all of that. Brilliant, perfect. Right, I'm hoping that everyone can see the charts that I've got. So let's just get them all back in play. Gold. Where's the DAX gone? There it is. Oh, let's just get rid of that anchor line. Right. Here we go. looking out right in the next few seconds. So 175 is the expectation up at the top of the screen. 175. Watch out for the spikes as well. The spikes are very important because you can go with the spike for the first few minutes as the market reacts to the headline report. Here we go. 287. Wow, that's massive. That is going to be huge. Right. Okay. So how are we doing? We're seeing gold pulling lower. We're seeing the DAX sharply higher. There you go. Sharply higher on FTSE DAX. Massive move on dollar yen up. Massive move on euro down. God, this is big. Right, so not only that, you've got slightly lower than expected average hourly earnings, in line, slightly up on the participation rate and up on the unemployment. So basically, that is a pretty strong report all round. So let me just quickly tweet about that, and just you can watch my charts as I do that. 287. Wow, that's huge. That's a really strong move. 4.9 on unemployment. Average hourly earnings 0.1 was slightly disappointing. Overall, a strong report. Euro dollar, massively dollar strength. Off. How many ticks? How many ticks was that? 80? 70? 70 ticks. Overall strong report. No, tweet. Right. So yeah, very strong moves. So what we're going to do? I think that is a report that I think is going to just go with a trend for now in the next few minutes. So you could continue to play that. I think ultimately it will get retraced a little bit. So watch out for the spike. There's always quite spiky moves. I mean, obviously we've had the initial move across all these markets. I would now, I think it's a trending move initially, so because it's such a strong report. Now I haven't seen the revision higher. Look at that. No, it's 11,000. Wow, it's a downward revision on last month. Really, really strong payrolls headline this time, but a downward revision on last month. Okay, so I think you've got to bear in mind that could retrace on the downward revision, and average hourly earnings already slightly disappointing. So again, we're already seeing that on sterling, aren't we? Slightly higher on euro. I think that sterling is now unwinding. And look at the equity markets, all lower. So you've had that spike. You're having the retracement now. Gold, not really reacted hugely, which is, I think, surprising. I think there could be more move in that downside on gold. I'm really quite surprised at that, because considering how big the headline number is. Really quite surprised at that. Okay, so how much of this move on cable is going to get retraced before you start to see the dollar buyers coming back in again? I don't think that retracement is going to go too far. I think you've got that resistance at 1290.60. You're only sort of 20 ticks away from that now. We're quickly unwinding that move. Okay. So let me get... Oh, sorry. I need to get a big chart back on that one. Right. So how are we looking in terms of our moves? Yeah, I mean, across this, it's very interesting. They're already retracing. Now, it could be on the wow, that's really interesting. Look at that one on the Aussie. But you'd still say that this is a dollar strong move. Okay, euro dollar. But this is the initial retracement. So you've got the resistance at 1050 on euro dollar. 1050 is a resistance for this retracement, as is, to be honest, where it is now, 1022. And for that, I'll show you the hourly chart, which shows you the resistance at 10.22, 10.50. You know, that the 10.22 was around about these sort of. If I get you the crosshair back to these sort of breakdown levels, 10.20, 10.30. So yeah, I think you could well find another selling opportunity between 10.20, 10.50. So you're up 10.28 now on euro dollar. Oh, yeah, Jesus, that's really interesting because this is such a strong payrolls report that obviously you get the dollar strength from that, but will that drive risk appetite positively? And positive risk appetite is obviously good for euro at the moment. What about sterling? Please explain oil. Right. In and out in 10 seconds. Well, well done, Chris. How long time does a report affect the market? Is it hours or days? It's interesting. You'll tend to find it will go throughout the afternoon. Certainly with a very strong payrolls report, you will see the markets moving throughout the afternoon because the US comes in and then trades off the payrolls report. Yeah, strong move, but retraced. I think this will be a payrolls report that is likely to be one that gets bought into on dollar yen. So I think this retracement on dollar yen could well provide a little bit of a near-term buying opportunity. But as ever, lots of spikes on payrolls because you get the initial algos doing their move, and then the traders start to react on top of that. So where are we looking? So across these markets, you've not really seen any real move on gold. It's interesting. Why not? What's going on with gold? Euro dollar is that starting to drop away again? Having had that retracement, is that starting to drop away again? I think it might be. And again on sterling. Sterling finding that resistance, as I said. Sterling finding that resistance, 12.90.60. Didn't quite get there, 56, but falling away again. Seeing the FTSE rising again. You see, these are pretty much all almost textbook moves. Actually, the spikes you get retraced and then you go in the direction of the original spike. So you've got the spike, the initial spike on euro dollar lower on that strong payrolls report being strong dollar. It seems as though that rally's rolling over again, possibly, and you could well have another opportunity. So you'd be thinking about your stop above 10.43. I'd say probably maybe even in the 10.60s in this congestion. Because basically, if it gets into the 1060s, I think that would probably suggest that maybe it's going to go even higher. I mean, the ultimate stop would be above the high at 1082, because then if it moves above that, you'd say, well, the market's gone with the risk angle and not with the strong dollar. Dollar yen has retraced and started to form a bit of support again. I think that's probably going to start to go higher again. What would you do in terms of your stops? Well, you've got a lovely stop at 1034. That's 40 ticks away from here. So underneath that, again, these are all moves. I think this is a payrolls report that you'd go with the move and with the data, because I don't think this is going to be a move that gets unwound and then you hold the unwind. Sterling, for example, here, as I said, hitting that resistance and falling away. Not dramatically yet. I'd love to know what's going on in gold. Might have to investigate. What is going on gold? It's not moved. Is that something wrong with my data? I don't know. I hope not. This is Reuters data after all. But anyway. Okay, so equity markets starting to pull higher again, aren't they? They've found that support and they're pushing off. So you're going in the direction of the positive data. So this is interesting. So yeah, and as I said, sterling now falling away with a strong dollar. Strong dollar, sterling falling away, and dollar yen starting to pick up again. Euro dollar starting to pull lower again. So yeah, this is interesting. Are we going to get that support holding now on dollar yen? That support unfortunately I haven't got the okay, do it across here. 1073. Support 1073 on dollar yen. Resistance on euro dollar now seems to be that 1043 level. That seems to be as we're falling away. DAX is now pulling higher again, as I said, starting to go with the positive move on the payrolls report. So this is clearly seems to be a payrolls report that they're going with this dollar strong, but also positive risk as well. So dollar strong is obviously impacting across the forex majors. I don't know what's going on the gold chart. If gold is moving and my charts are not giving me the data, then I really apologise. That is very annoying. And obviously the equity markets are showing going with the positivity of the report. So you're seeing DAX now breaking out. DAX breaking out. FTSE not far from breaking out. So they're going with the run. So go with the run on that. It seems as though the DAX is breaking out. Go with the run. That's what I would say. That's what I would expect. Any sort of little retracements, I think, probably buying opportunities. Buy dollar yen from crikey. I'm going to call you Mr. Gilbert because my eyes are rubbish and can't see your name properly. Okay, so we've got sell sterling dollar. I think yes, certainly if you break down below 29.06, I think sterling dollar is a screaming sell. Dollar yen finding support. So yeah, buying dollar yen. The move hasn't been massive, but yeah, I do apologise. I think there's obviously something wrong with my gold data. I don't know what it is. I do apologise. Yeah, DAX pulling higher, still pulling higher on the DAX. Sterling. If you see FTSE breaking out 65.72, that's a breakout. Dollar yen still pulling higher. Sterling not yet broken below that low. 29.06 is the low. Maybe wait a little bit more for a retracement to sell euro dollar. Yeah, it depends on whether you've seen the retracement or not, I'll be honest. I mean, my sort of experience of looking at payrolls, generally you tend to find you get the initial move for maybe 15-20 minutes and then you do get another retracement. So this is sort of really near-term trading at the moment I'm talking about. But in terms of sort of your compelling move in the wake of payrolls, yeah, you do quite often tend to see the sort of after 15-20 minutes you start to get another retracement. So keep that in mind. But certainly at the moment it looks as though dollar yen is pulling higher with the strong dollar. Euro dollar just creeping lower at the moment. Sterling dollar creeping lower as well. But DAX has broken out and going. FTSE is now breaking out. These are all positive moves on these equity markets. What about Aussie dollar and oil? Sell both. Let's have a look at Aussie dollar very quickly. I haven't set up on Aussie dollar. I did have that chart. There you go. Aussie dollar. Get back on Aussie dollar. No, that's not AUD equals. Interesting that Aussie dollar is pulling higher. Now Aussie and the loonie tend to be risk plays. So you tend to get a positive move with equities on Aussie, and so it seems it's breaking out. So you've got to be careful with playing the Aussie, I think, on such a strong payrolls report. In terms of oil, the annoying thing is my oil charts are 15 minutes delayed, so I haven't got a reaction yet on payrolls data yet. But what I would say is the expectation would be, I think, oil positive on the back of this data. Gold did a 50% retracement on the move, now rolling back down again. Let's have a look. I'm so sorry about my gold chart. I wish, yeah, I mean, look at it, 1344. I've finally got a print on gold. I don't know what happened there. It's now falling away, 13.44. As I said, strong dollar is negative for gold. Now, if I show you my gold chart, I think gold is a near term. It's coming up to a near term sell if it breaks through. If it breaks through 13.38, because I think that's a near term sell. A near term sell, I stress, because that is the reaction low from Tuesday. I think that would then take you back into sort of all this congestion here from last week, from the sort of consolidation band that we saw. But yeah, if gold breaks through 13.38, yes, I think that's continued downside into that band. And ultimately, I think gold is a buy on a medium to longer term basis around the breakout point at 13.36. It's sort of carried on this near term corrective move. You've got some correction signals on the RSI stochastics as well. So I think back at 13.06, I like gold again. But for now, it is correcting on this strong dollar. And also risk positive move. Right, okay, everyone. That's I think I'll wrap it up there. Think we've had a pretty good discussion about this, so I'm hoping that what we can, you're already starting. Sorry, just before you sign off, you're starting to see the dollar yen pulling back lower. Again, you're starting to see euro dollar pull higher, as I sort of alluded to. After about 15-20 minutes, you do start to get a bit of a second wave retracement. You're starting to see these markets move again. So I'd say now just wait for these moves to play out, these little retracement moves, because ultimately I think this is going to be a strong payrolls report that gets bought into in terms of the dollar, buying the dollar. So that would be ultimately waiting for your sell signal on euro dollar, waiting for your buy signal on dollar yen, and your sell signal on sterling dollar. In terms of your equity markets, a slight retracement in the last few minutes. Again, that's probably now triggered the retracement. You're seeing a retracement on gold as well. So this retracement you're going to see, I think, pulling back maybe 9,600, which is the breakout level. That would be another 25 ticks lower on DAX. FTSE breakout was 6,572. Not far from pretty much where it is now, so maybe a little bit more of that retracement on FTSE, but certainly these retracement moves are coming through now. So very interesting moves that we've seen on this payrolls report, and with that I wish you good luck on all your trading. Thank you very much for taking part. We'll sort of reconvene next month for another payrolls report, and with that in mind I wish you good luck in all your trading.